well today. We are having our webinar series on Optimize Your School's Profitability through Expense Management. This is a recorded session, so this will also go out to everybody in replay for their viewing pleasure when they would like to see it. I'm Tony D'Agostino, founder and CEO of Inspired Care 360 and your host today. And today we'll be having John Rizzo, who is our financial experts for IC360 financial experts, as well as our own Jen Guadioso, who is our Executive Vice President of Operations and Advocacy, who will be joining us. We're going to jump right into the agenda today. And as part of the agenda, we like to do our welcome here and then talk to you a little bit about such things as that if you have a question, there's a Q&A section that is on your dash here. Just click on the Q&A section, ask your questions, and not only is John available, but Rob Spatola is also in the background, and he will be answering questions if you do have any of them. Again, with the chat, if you do see things pop up in the chat, we're giving you information, or if you are requesting to be contacted by somebody on this, or you want IC360 to contact you. We will be having a couple polls today, so we look forward to your participation on those polls, and we'll be popping those up likely in a few minutes and look for everybody to hopefully participate with it. We are going to go through a couple of the different housekeeping items, and then we'll go through an introduction with John. They'll be pulling questions through. We will have Jen also, but within talking about the topic today, I'd like you to hang on to the very end. There's a special offer that we have for you for one of our partners, and that's Discount School Supply. So if you have a chance to hopefully hang on to the end of this, you will see that special offer. Really appreciate it, and then we'll get to question and answers. So let's jump into housekeeping. And our first one is our administrative leadership development. You know, we've had a lot of people who've come to us and asked us about what is it really that helps take our culture to the next level. And realistically, it is trying to transform your managers into true leaders. And in doing so, and doing that, you're looking to fully empower your team and get your staff members, whether they be teachers, cooks, other administrative personnel, to not only be fully empowered to become accountable for the actions that they're doing to see your vision through for your schools. And it is something to help you really support your team in solving problems. So your administrators do not have to solve all the problems, but your team brings the solutions to them, which is critical to moving your business forward. You really seek to also have hopefully a coaching culture. And what's really a coaching culture? Coaching culture is really the idea that you're not telling people what to do all the time. That's sort of like a consulting culture. You know, I'm going to tell you what to do and how to do it, when to do it. Or a mentoring culture really is which is good too, is I'm going to show you how to do it. But a coaching culture really is how do you want to achieve this? In other words, asking questions. So your administrators ask your team questions so they start thinking about solving the problems on an ongoing basis. And then looking and seeking to reduce turnover is critical for all of us right now. So to do that, you really need to change your culture into an environment that really is empowered. So that really helps not only, you know, reduce your turnover, but increase the number of people that you're looking to bring in and having a fantastic place to work. So with that, if you have an interest in our administrative leadership development, please reach out to us. Hans, who's in the background here, if you could send out our email address for that for benefits at inspiredcare360.com in our chat. People could click on that if they were very interested in learning more. Also, another element that we've reviewed in the past and like to review again is about something that comes with our membership that has been really critical and constantly going through upgrades, and that is our Inspire University. Inspire University is something that delivers a tremendous amount of content, a lot of things that come with it, from your family handbooks to staff handbooks that we personalize for our members. Make sure that if you are a member out there and you want to have that updated, you should be having that updated once a year. And in addition, for those who are not members, it is critical to look at using your handbooks as playbooks, you know, orientations. When people come to work the first day, it is tough to understand what they need to do. And having an opportunity to sit down in front of a director is great, but typically that's a premium. And for the director to say the same things over and over again, what we've done is we've created personalized orientations for all of our members in each one of their individual schools. That allows them to really to communicate the same consistent message over and over. As it was said to me recently, it should be built in e-learning and highly available for distribution if you have to say it more than once. And then operational procedures. This is really one of those brass rings out there. There are so many things about understanding the operations, and not only with new staff, but from your existing staff. Is everybody singing off of the same page when it comes to your operational procedures? That all comes with the IC 360 Inspire University, which is all part of the membership. In addition, if you wanted to, and these are a lot that people do come to us to, a typical 120-hour gold standard CDA program, for training goes almost around $800 to $1,000. We are able to sell those as part of our GPO, which we're going to be talking today, but $199 per individual, which is sort of an unheard of number. But if you are a member, that is a special program rate. And the ability that you soon will be able to do e-signatures and e-signs for your enrollments for staff members and the like are on its way. If you want to learn more about that too. We also have over 70 hours of professional development. And this is really for sort of the shoemakers kids in the sense of our staff. And what I mean by that is, they say the shoemakers kids are the ones who never have their shoes repaired. It's because the shoemaker's always working so hard to, repair shoes for everybody else. Same way with our teachers. Our teachers are out there teaching all the little ones, but oftentimes do not get the professional development that they so desire, that they absolutely want. That all comes with Inspire University as part of your membership. Over 70 hours on critical things specific to the child care. This is not generic stuff. It is great content, and it gets to that application level of knowledge, which is a high level of retention. And soon to come is our total rewards relationship. Is really about our performance excellence program. And that is how to ensure that people not only go through training and development, but they really go through an entire performance management that is sort of a bit of a set and forget from the day they come on board, and making sure that they're achieving and becoming competent and getting to the goals that you want to. And we have not only our own library content, but you have your opportunity with Inspire University to create and develop your own e-learning, your own content, and have it available throughout Inspire University as part of your membership. That all comes with it. And that is part of the e-content builder. Along with that is our e-survey engine that allows you to create as many surveys, whether it be for staff or families or your community, that you would like, and process those comparative using that data with a very strong survey engine, all part of Inspire University. Okay, we've paid enough bills internally. Now we're ready to get started with the show. So with that, I'm going to look to have, in a few seconds, I'm going to ask John to come on. And this is Optimize Profitability Through Expense Management. So we have John Rizzo joining us today to do our presentation from our financial experts, and then Jen Guadioso. And Jen will be in the process of doing that and helping us out with parts of it for what Inspire Care 360 offers. So John, if you want to come on board, I know that I think I relegated John by turning off his video. So I'm going to ask him to start his video this time. Hey, John, how are you?
Good afternoon. How's it going?
Hey, everything is going great, as if we never saw each other today, but we have a few minutes ago, and it's great to see you. It's great to see Rob, and you guys had a big move for RDG. So not that it matters a lot to everybody around the country, but it's obviously a big thing for you guys. What did you guys recently do?
So we just moved to a new office. So we bought a new building in the downtown Rochester area. And now, so you don't see what you normally would see at our old office was our mission, vision, values behind us. But now we have this lovely tree behind me until we get everything set up here, because we've only been here a couple of weeks, but we're excited. It was a big expansion for our firm, and we have the whole team here together, and it's a beautiful space. So when you're around, we want to be able to show you this, our farm.
We
our
can't
home
wait to see it. Love to see it. You guys were on the cover of the city's business magazine too. I saw this past week. So congratulations on that. And I also think it's, fundamentally, we talk about expenses and, the idea of what we're trying to do. It's funny because I think part of what you guys did with doing your own acquisition of offices is all about growth and expansion, expense management, probably. So.
Yep, growth, expansion, you want to make sure you utilize, the space that we developed, is space that we want to utilize to maximize our revenue too, which is something we could talk about today, that there's parts of our space that you might consider to be quote unquote play, like a bar and a kitchen and things like that. But it's equipped to actually host events and things like we're doing here today. That will, advance our business as well as help our clients. So we're excited.
Since I'm driving this today, John, why don't you just tell me to advance the slides and I'll go ahead and do that for you.
Okay, so we're going to talk about cash flow management today, which isn't always, what I'd call the most exciting topic compared to some of the other ones that we've talked about in the past. But it's more of the blocking and tackling of things that are necessary for a business. So we've had, an interesting couple of years here with COVID and stimulus and business challenges and things like that. So cash flow management's been a big thing on the plate of our clients. And in some cases, some of our clients have more cash than they've ever had because of the stimulus wealth that we call it, the different stimulus programs that exist. So if you look at the list here, we've covered these in past webinars for those of you that were on those webinars. So between the PPP loans, there are 2 rounds of that program is now gone. And really the point to make there is making sure that your loans were forgiven. The last thing you want is to receive those PPP loans and then forget to have them forgiven. And next thing you know, you have a loan, all of a sudden it wasn't forgiven. The economic injury disaster loan. So that program started kind of small with a cap of $150,000. And then over time, because the government didn't, they had excess funds from this program, it went up to $2 million. And these were 30-year, 3.75% loans. And we've advised most of our clients that, hey, even if you don't see a specific need, it's probably good money for you to grab. It's like a mortgage for your business, which really doesn't exist. You're not going to see a 30-year term when you don't have real estate involved in a business loan. So those are huge. The employee retention credit. So that program, you can still apply for the ERC, the employee retention credit. That's based on a decline in your sales quarter over quarter compared to 2019. We've had clients obtain over 7 figures in these funds. And that program ended as far as the quarters that you can apply for. Q3 of 2021 was the last quarter for that. So you have all of 2020 and you have 3 quarters of 2021 in order to go after that money. You can amend prior year payroll tax filings to grab that money. So that's something that's still going on. And then the last 2 here, the Childcare Development Block Grant and the Stabilization Fund, those are specific to your industry. So with those, we had over $25 million set aside for the Childcare Development Block Grant. And that's specific to $25 billion. That's specific to your state. So that's something you'd have to work with your local district offices in order to see what's available, what programs are there for you. And the same thing with the Stabilization Fund, which added another 24 billion. So we have, almost $50 billion set aside across the country that then kind of trickle down into the states for those 2 programs. So a lot of wealth was handed out to businesses that certainly needed it because of, COVID. But now the question is, what are you doing with those funds?
Yeah. And John, before we go forward, just to clarify something, for the ERC, the Employee Retention Credit, people can still apply for that, correct?
Correct. Yes, it's a payroll. The credit is obtained through your payroll company, and you have to amend your payroll tax returns in order to receive those funds.
And one of the areas where we actually did it and we received funds for my schools, in addition to Inspire Care 360, was, one of the elements said, were there constraints that were put on you by the government, and one of the things that they had in New York State for my schools was they said the class sizes had to be smaller during COVID. And because of that, it significantly reduced the revenue based on the class sizes being forced to be smaller. And so we did the math, we worked with RDG, and we determined that it did make sense for us to apply, and we were able to be awarded that. Obviously, we have to keep all of our documentation and information aligned, but our financial experts were very helpful in that. And again, just for the Child Care Development Block Grants, obviously that's been expanded nationwide, as well as the stabilization funds. You're going to be looking for the stabilization funds through your licensors. So if your licensors are not talking to you about it, in your state, definitely talk to your licensors. Okay. So thanks for that, John.
Yep, absolutely. All right, so we're going to hop into a poll here, and this is kind of on the other side of the cash flow is, if you're having any cash flow struggles. So have you recently been concerned you would not meet payroll? And I would kind of extend this towards, or paying a large bill, right? If you had a cash flow issue here recently that we can help you with.
Yeah, and just to give some additional flavor on this, as those of you out there are thinking about this, is, a lot of times when it's coming up to payroll time and you are checking your account, because even though your books say one thing, you're really sort of coming thin, or if you're using, a line of credit maybe out there, and you're using your line of credit often, or you have large credit card bills that come in and whack you. Those are the kind of things. So let's take a look. We'll end the poll. Give one more minute for people, or one more second or two, to get people to answer in there. So I'll share the results. And John, what are your thoughts?
Yeah, so we have, a third of the participants today have had trouble, right? Have had cash flow trouble, whether it's payroll or paying other bills. Cash flow has been an issue. So this webinar is timely to go through it. And, this isn't a surprise. There's been a lot of issues out there, obviously, with, trying to generate cash flow with all this been going on. So we're going to kick into cash flow management. So with that, typically we leave Rob behind the scenes, but Rob is the cash flow management guru. We're going to have Rob go through these next couple of slides. Rob Spatola is with me and talk about cash flow management.
Okay, thanks, John. And so Tony, I'd be happy to show my face for the first time. This is getting outside of the comfort zone.
Absolutely, Rob. We'd love to see your beautiful face here. And so I'm going to ask you to start your video. All right. I'm asking you to unmute so John can mute.
Yep, we're good.
Awesome. Okay, thanks, John. So cash flow management, as John alluded to earlier, this is really the blocking and tackling of your business. What you need to do is to develop a system to track your cash flow. You want to do this weekly and monthly. You can start with a base of your income statement. And in a few slides, we'll show you an example. So typically, you as a business owner, you've got your pulse on the cash flow of the business. But as that business grows, as you have more centers, that becomes a little bit more complicated. It's also more complicated the more employees you have and the more vendors that you have. So a good place that we recommend starting is your largest and most consistent recurring cash needs. Number one is payroll and benefits. If you participated in our KPI webinar back in May, you heard us tell you that, industry-wide, you're about 50% of your cost, 50% of your revenue is invested in your people, payroll and benefits. So that's the first place you want to look. Most of our clients and most of the daycare providers that we work with are paying their employees on a weekly basis. So again, that's where you want to start with that cash flow management. Most clients, most companies will have a specific bank account for payroll. And so you'll transfer money from operating to payroll. if you're a smaller center, you may just have one account, and I'd recommend that you start to divest and break that cash aside so that you can continue to invest in that payroll. The second thing that you want to look at typically are your occupancy costs. Now, your costs are going to be pretty different depending on whether you're renting or whether you own the building that you're in. But either way, your fixed monthly rent and your mortgage payment, you want to add those into your cash flow forecast. Obviously, those are paid monthly. So as you're building out your forecast, which likely is going to be in Excel, as you're building this out, you want to accommodate for each of the weeks that roll up into each month in the year. With your occupancy cost, it's obviously more than rent. You may, under your lease, be responsible for some repairs and maintenance, your taxes, utilities, things of that nature. On your income statement, ideally, you have a personnel line, you've got a grouping, you've got a grouping for your occupancy costs, which is going to include some of these utilities, repairs and maintenance, things of that nature. Your occupancy costs are typically going to be your second, your biggest expense after payroll. Food and supplies is a major direct program expense that you're going to want to focus on. As a center owner, you may have less control over your food and supply costs. Your directors may be the ones that are driving those costs. They may be the ones that are driving the purchasing of those costs. So again, as you grow your business, the more people that have their hands in control of certain expenses, you may want to consider centralizing. So if you have 2 centers, you can have 2 people, make those purchases. But if you jump up to 7 or 8, maybe you want 1 person responsible for your purchasing, and then they can purchase and they can purchase for all the centers, take advantage of volume discounts. And we'll talk about some groups a little bit later in the program as well. Insurances, as you see there, obviously you've got your facility insurances, you've got your workers' comp, you've got your general liability, and vehicle. Those are your major expenses on the insurance side. A best practice that we see for all industries on your workers' comp is to pay as you go. That way you're not going to get hit with a significant audit when you're audited by your carrier. Workers' comp audits happen every single year. No one's exempt from those. So it's a good practice to work on those, to pay those with every one of your payrolls. Did you have a question?
I do, but I'm going to ask you when you're done with the next one.
Great. So an estimate of remaining costs. So that's just a big generalization, but each center, each operation, each business is unique. You're all in the same industry, but you run your centers uniquely from everyone else. So you do have other costs that may be slightly different than others. And perhaps there's a major cost that you have that I haven't listed here. I would focus on those remaining costs, and if they're material, then break them out. But for your initial pass at creating a budget, feel free just to estimate and take all other costs that haven't been considered, whether that's 10 or maybe 12% of your sales revenue.
So Rob, I have both a question and also a little bit of a statement for everybody. On the payroll side, I think some of the gotchas out there that you have to be, cautious with is definitely looking at overtime. Right now, we're all struggling with ratio. And I do recognize, and I know from my own schools, that trying to stay in ratio has been crazy because we cannot find the staff that we need. So we have been allowing oftentimes to have staff members go into overtime, which can be a benefit for staff members. It also can be a burnout factor. But one of the things that you may want to consider doing is on an ongoing basis is really managing your overtime closely with your directors and or with your staff to let them know that it is definitely sort of a prior approval type of thing, that if they're going to go into overtime, that people tell you ahead of time, that you get an informed decision so you can approve it. Because you can have a lot of overtime happen. And right now we've been managing it so much to the point where we only have, even in these tight times, maybe about 2 hours of overtime out of my 3 schools, every 2 weeks. And overtime is counted weekly, not off of every 2 weeks, even if you pay every 2 weeks. So that is, one of the sort of gotcha areas that you have to be real cautious of. Rob, I was going to ask you though, with payroll, as to payroll expenses, is there any type of typical ratio that you're aware of what percentage of cost of payroll should be to your payroll expense overall?
So payroll to revenue, we want to keep in that 50% range. And then your question, I think, is of your payroll cost, what is your direct wage and salary versus the other costs? And
yeah.
The other costs generally range, and by locality too, but I would say 18 to 20% would be your payroll taxes, benefits, and other expenses that are directly related to employees.
So these kind of expense numbers that I think that Rob is giving, I think where it's just fantastic is, when you talk about estimating or looking at, you can look at previous years, do some really quick math, and then you start creating benchmarks for yourself, whether they're right or not. I think that's in talking with, our IC360 financial partners, but at least what it does is it gives you a benchmark of where you're starting from. So back to you, Rob.
Great, thanks, Tony. And a great comment about the overtime, and I'll just add to that we do have clients we work with that in all industries, but also in the ECE, that track their number of staff hours against revenue and track overtime hours. And so that is something that the directors are responsible for reporting back up. So I'm glad that you pointed that out. The other cost here that we focused on was income statement. The last item here are other loans. So, we're capturing the items that are expensed, right? Profit and loss. This is what reduces your income down to your net income. But you do have a cash flow consideration for any loans that you have on your balance sheet. So if you have one of those idle loans, you're probably started repaying that now. If you have a term loan because you needed to refinance some debt, or you have a term note because you acquired a center, that you want to include in your cash flow budget. Vehicle loans are another as well. So you want to make sure that those are all being captured. Okay, so cash flow management. The second piece to this is, we went through our budget and we did budget, let's say version 1.0. And that last slide, perhaps you as an owner, maybe with your team, you can come together and pull together a budget in, I would say 5 to 8 hours. You can pull together a pretty reasonable budget, and then you want to start drilling into it. You want to refine it, because the first time you do it, it's going to be a shot in the dark. But you want to refine that. You want to break it out into those smaller recurring costs. So you want to drill into the computer and software costs. There's a lot of subscriptions related to, your email, Office 365, marketing, things of that nature. So you want to drill into those costs, and you can start to line item each of those costs by vendor, and then we can bring that to the centers, and that's what we call operationalizing our budget. So now you've got this grand budget that really took kind of 8 hours, but now you start refining it and you start working with the center directors on evaluating those costs. Here are the costs that we see, and is this necessary? Are we getting good value out of this? You also want to look at your equipment leases. You want to drill into those seasonal costs, because snow plowing and mowing costs, they're a constant. When you're looking at snow plowing, especially up here in the north, when you're looking at your snow plowing, you want to focus on that contract. Are we going to pay? Are we going to pay for the full season up front, or are we going to pay on a per run basis? Those are the kind of vendor evaluations that you will start to look at when you're putting your budget together, and really evaluate, am I in the right contracts? Repairs and maintenance is an area that, this ebbs and flows. Repairs and maintenance, whether it's vehicle, whether it's building or equipment, Sometimes things just happen. Things just break. Everyone knows that. So our best practice here is to go back and review your historical costs on your minor repairs and maintenance. And we've got a slide a little bit later on where we talk about preventative maintenance when we get into our assets.
Hey, Rob, as I change slides here, a question for you.
Yep.
One of the things that we talk about in this one, unfortunately, I think it's coming out a little blurry, the next one, but a lot of owner operators, let's call it duck a duck. We pass through owner expenses through the company, oftentimes, like, a cell phone or, our car or different things. It's very common to be done. How do you see about just a thought process on managing those expenses, for the future and making sure those can be identified as owner expenses in the future, relatively quick?
Sure. Our suggestion would be break that out separately. Break that out. Owner salary, owner wage, and if the owner has a spouse or children perhaps that are receiving a wage, put that all into that same bucket. If there are other costs that are really owner specific, outline those, put those in a separate account so that, it's still a vehicle cost, but put it in there as, Tony's vehicle, put it in there as owner expense, owner, discretionary expense for maybe some other miscellaneous items. And really the key point to that is when you're looking to sell your centers, now you can very easily evaluate your income statement and you can add back all of these discretionary items that a purchaser may not use. A purchaser they're not going to use your vehicle. A purchaser isn't going to pay your spouse or your children. So when you're developing that cash flow for a potential sale, having this information outlined already helps you get there very quickly. So, on the screen here, we've just got this income statement example. You all are reviewing your income statements on a regular basis. I know that, but we just wanted to show just very, very quickly, you can simply, from a budget perspective, jump right to your cost of revenue and outline your personnel costs, outline your program, food and supplies. We've got occupancy costs, other administrative, we've got marketing. So this is just an example, but this is a goal when you're trying to put together your income statement and when you're putting your budget together.
You can do that.
Okay, so our second poll question here is, do you delegate the approval of new vendors?
Okay, yeah, so, with this question that Rob has put up here, this really is a situation that I've, gone back and forth on myself through time. And that is that when we're looking to bring on new vendors, whether it be food, office, school, supply, it could be, capital equipment, things of that nature too, or like lawn maintenance, property management, handyman, all those different services. So if are you currently delegating those and having your administrative team do them, or is it yourself, or possibly even if you're in partnership with a spouse or someone else, have you delegated those away? So with that, we are going to, let me end the poll here, give one more second or two. All right, so I'm going to end the poll and I'm going to launch it. And so Rob, what do you think?
Okay, so again, about a third of respondents a little more than a third are delegating the approval, which is great. I think as a business owner, you want to delegate, you want to trust that other people can execute on your behalf. And that's really important for you as a business owner, for your balance and for your growth. With that, especially for that 1/3, but for everyone, it's really important to establish an internal control system for the setup of these new vendors. There's a few reasons for that. A lot of it is risk mitigation, but again, as you grow and you involve more people in your process, you want to make sure that there is some oversight into new vendors. The reason we want two people to look at new vendors is so that a center director or a staff person, doesn't add their cousin and, for some fictitious service, mowing service or something that really isn't taking place. It's very easy to create a vendor and an invoice and perhaps cut a check just because you're trusted and you trust your people as you should. However, we should have some control over that. As a center owner, you should review your new vendor listing periodically. So get a report out of your QuickBooks or whatever other financial reporting system you're using and review new vendors and take a look at what's being paid to those vendors as well. Right now, January 31st, we've got a 1099 deadline. So you as a company owner, you're responsible for telling the IRS who you've paid more than $600 this year. It's not all of your vendors. Corporations are generally exempt, but any unincorporated person, a sole proprietor, an LLC, an LLP, any of those entities should receive a 1099 from you. Again, the deadline for that is January 31st. So when you are setting up a new vendor, make sure you're obtaining that make sure you're obtaining that W-9. That's going to help protect you and make sure that you're issuing the 1099s appropriately.
And you're gonna have to do that with Venmo soon enough, it sounds like.
Yes. Now, one way to mitigate the number of 1099s that you issue, okay, so one way to take some of that responsibility off of your plate as a business owner is to pay some of those vendors with a credit card. If you're paying via credit card, you don't need to issue a 1099. If you're renting your space, generally you're issuing a 1099 for rent. Even if it's a self-rental, technically you should be issuing a 1099 to yourself because you likely have an LLC, another business set up that owns your real estate. When you're running multiple centers, consider consolidating your vendors, okay? Again, as your business grows, things become more complicated. You likely want to centralize some of these duties. In your region, there are multiple food and supply service vendors that you can use. If you're using QuickBooks, for example, or if you're using a specific billing software, for example, you're not going to have one software for one center and a different for another. That just doesn't make sense. Why would you have two food and supply service vendors? You can have the same one. Same thing for small repairs, windows, locksmiths, things like that, where if something goes wrong, there's going to be an impact at your center. And you as the owner likely may have to stay there late or get there early or be available on a weekend to make sure that that's resolved. So consolidate your vendors. Make sure that you've got the same vendors working at all of your centers. HVAC, vehicle repair, security services, insurance. All those are prime examples where you can consolidate vendors, typically build better relationships, and typically you can save some money doing that as well.
Great. Fantastic, Rob. I greatly appreciate that information on, multi-centers. I know when I took over my centers and my schools myself, one of the challenges that I saw was actually a lot of decentralized decisions made by the directors. So we did find out that, you sort of organically come by having multiple providers, not with intention, but that's just sort of how some things grow up. So it is up to like a centralized regional manager or an owner to take a look and try to consolidate for best value. So
Agreed. And taking some of that preference away from the director, perhaps allowing the directors to talk about the vendors. Hey, I use, we've got 3 different lawn landscape companies. Well, let's talk about them as a group. Let's see which ones, what are the pros and cons, and let's pick the one that we think will work the best for all of us. So it's a great team building exercise as well.
Great. So we're going to jump to, thanks so much, Rob. We're going to jump to Jen Guadioso coming up, and we're going to come back to our financial experts in just a minute to talk with them. But Jen, how are you?
Good. How are you?
Good. So happy to have you on here. And we're going to be talking about what IC360 does for Optimize, and well more than myself. Jen is the ultimate pro with working with our members on this. So I'm going to have, for our group purchasing, Jen's going to talk to us a little bit about what we do there. But before we do that, we created a poll question, and I want to launch that last poll question and then get your reaction to it, Jen. But so we're going to launch it out there to everybody. If you don't mind going in for Inspire Care 360 group purchasing. All right. How many, which I didn't put in here, so I'm going to tell you what it was. How many vendors do you believe that we have discounts or value-added relationships with that you could not get off the street? Is it 5? Is it 10? Is it more than 150? Is it 20? What do you think it is? What are the number of valued relationships that we have today? Okay, so with that said, I am going to close the poll in just a few seconds. I see that we're getting a pretty even spread. We'll give a few more. We have a few more people who can add in there. All right, great. So I'm going to end the poll. A few last ones coming in, and I'm going to share the results. What do you think, Jen?
It's interesting to see. I would say with the majority of the people answering that they say 20, I will let everybody know that, and close second is more than 150. And that is where IC360 falls into with our GPO and our trusted partners when it comes to purchasing. So
wow,
pretty close, very close.
Yeah, so where we had about 20% we thought it was, we have over 150 plus relationships today that we can share directly with our members that are out there. So that is significant. I think a lot of people, as you see there, don't recognize the overall value we have, but at least some of them, a number of them saw that we had at least 20. So
Absolutely.
all right, so let's move forward here.
Yeah, so with part of our membership with IC360 that is a fun part for me with our members is our buying power that we've been able to bring to all of our members. And a lot to piggyback off of what Rob has said too, when it comes to simplifying, getting all of your food and your supplies from one vendor, trying to vet out those different discounts, and also being able to save you guys time when it comes to purchasing. So with our buying power, we've been able to pool all of our members together to be able to bring these savings to everybody through our GPO, through other partnerships that we've done. When it comes to food and supply prices, we've saved 30% and beyond that. I've done different market baskets with our members. So that takes the ease off of center directors or yourselves as owners, where we do that legwork for you. So behind the scenes, I'm doing different market baskets to be able to really bring you those savings. I've seen food savings up to 43% off with a couple of our different food vendors as well. And we do the same thing when it comes to the office and janitorial supplies too, to be able to get you those savings anywhere up to 50% off as well. And it doesn't just focus into one vendor. I'm able to take our well over 150 vendors and send those invoices out to get the best prices back for you guys. And then also with our school supplies, our trusted partners, when it comes to school supplies, same type of thing. If you're looking for certain furniture, different, cots, you name it, any kind of supply, I can vet those out to our personal relationships that we have. And then we have discount savings, the different codes or, partnerships that are set up in advance that you can just automatically receive those savings on. And then also when it comes to services and capital goods, so kind of like Rob had said, when it comes to maintenance or lawn care, painting, redoing an office, any of those big capital purchases too, kitchen equipment, we have vendors that we've partnered with through our GPO that can bring you those savings.
One thing to add, is really around, especially the food. The food is a big one for a lot of us. Now, some of us cater, and so we don't have that option. But if we're doing snacks, even if we're catering, but especially if we're cooking, there's a huge spend. And you think about the time when I first acquired my schools, we were driving around, we were going to Aldi's, we were going to Sam's Club or Costco, what have you. And we were buying milk though at the grocery store. And we we're like, well, I still need to do this weekly. And I was bothering people with massive shopping carts full. But one of the challenges we had too was in some of my locations, we had super small space. So we couldn't buy a lot of product or supplies for food because of the super small space. But what we've been able to negotiate with these providers here has been great because we have the drop-off amounts being significantly less than what you would have for the street. So typically around $350, I believe, for a minimum order amount as to a typical $500 minimum order amount. So that allows the dollar to go much further. And two, this is not a co-op. When you're buying in any of these supply categories, you're not buying with others. You're just getting the power of IC360. So let's continue on, Jen.
Absolutely. And, to piggyback off that, which goes into our next slide with the trusted partners, when it comes to purchasing and doing the market baskets and trying to make sure that things are still aligned the same way that you're used to, because we know change is so hard. And that is one thing that I hear from directors when I'm working with them. Well, we need to have our food deliveries on this date. What about this? That's one of the areas that we work really hard with when we go out and work with our partners is we need to make sure that they're going to transition you guys in a very seamless manner. So there isn't any fires that come up and they're like, oh no, I don't have that. One big thing that we really strive on is your information is never shared. So we do not have, as we call a predator model, your information stays with us. We do not give it out to our GPOs. So it's not like you're going to get those annoying phone calls of waste management or phone systems or what have you. That just solely comes to me. And then I reach out to our partners. I get that contact person for you to work with, and then I introduce you to them. So again, there's not any bulk sharing of any of your information. And that's where you fall into that priority. We want you guys to be able to have, and our members do have that level of confidence in our vendors that we work with, and you are that priority. They also are going to talk to you about the different brands, products, and solutions that can be discounted. If there is a certain, let's say, chicken, I'll use chicken nuggets because that comes up a lot. If there's a certain chicken nugget that you're used to purchasing and you're not getting a great quality of it, they will go out and they will search a different brand for you so you get that. And then obviously when it comes to our member advocacy support, that's where me and my team come in and work one-on-one with whoever is going to be our contact person to ensure that you are getting the most savings out of the partners that we've introduced you to make sure that things are going seamless. If there is ever an issue, you guys can come to us, and then that's where we go, and I will call the vendor that we're working with and say, hey, what's going on with this? So we're really there to support you in all areas when it comes to working with the vendor relations.
And, there's a reason why Jen's title as part of it is Executive Vice President of Operations, but Membership Advocacy. And that is because of what she just mentioned. And that is that she's out there and her team is out there to serve the membership, is really to advocate for them. And so the big benefit, not only with the discounts, is chasing after any issue, as we really help you chase those issues.
Yep. And just to show, some of the discounts of what our trusted partners are that we've been able to grow. And this list is just a high level, just some of our top vendors that a lot of our members do use. And some were newer to me. And I was like, oh, well, this can work. But, we see Home Depot Pro for janitorial supplies. We were able to get some members that were transitioning through purchasing janitorial supplies, whether it was even through US Foods, Cisco, they were able to get through there, WB. But we've now recently partnered with Home Depot Pro, and they were able to get laundry detergent 37% less than what they were purchasing previously. But as you can see, WB Mason for school supplies and also office supplies, office furniture. We've had members that have used WB Mason to actually redo an entire office. I was able to vet out their office plans and went to a whole bunch of different companies from, Staples, Office Depot, WB Mason, even some construction companies. And WB Mason was able to come back and give them a huge savings and redid their entire office for them. When we talk about school supplies, we have constructive playthings, Discount School, Beckers. They've all been able to make a partnership with us that we can extend as an additional savings to our members. And then when it comes to food and supplies, we do partner with Cisco and US Foods. We have built that relationship with them to make that transition very smooth for our members.
Yeah, and thank you so much for this, Jen. This is just as what Jen said on the front end, just a sample of the number of providers, food being one of the biggest ones, janitorial maintenance, school supplies being the other top ones. But there are many other things. People have come to us in the past and said, what can you do about tablets? What can you do about smart boards? What can you do about, I need new furniture? And, a lot of this, we just went through it last year with a lot of the grant money that John was talking about up front. But there is a lot of times this money is being asked to be spent, and you do need to use that towards expenses too, to get the greatest value for it for your schools. A lot of this money is to refurbish your school too. So take advantage of it. But again, your dollars always is valuable as much as you can spend for it. So that's the value of our optimized division, is really allowing you to get the very most for your dollar with the very top brands. So thank you very much, Jen, and joining us. And I'm going to ask John and or Rob to come back. All right, there's Rob. But we can't hear you. I think John's off. There we go.
You got it.
There we go. Thanks, Tony. Yeah, so I'm back to talk a little bit about asset management. So on the next slide, I just want to go through a few things. So you've got your budget put together. These are your expenses, your recurring monthly, weekly, daily expenses. The next thing that you want to layer in there is reinvestment in your center, because there's nothing worse than having something break unexpectedly and it causes you to lose use of your room. It causes you to close your center down for a day or two. It causes you to deal with an issue at 11 o'clock at night. You don't want any of that. You want to make sure that you've got a safe environment. You want to make sure that the aesthetics of your center are clean and clear. And also there's this culture piece that Tony referenced earlier. You want to reinvest in the center for your staff and for your families. So set up a preventative maintenance schedule for your playground equipment. You want to make sure that that's safe and operational. A PM for your furnace and air conditioning. So every year, have them both checked out. Take a look at your roof and gutters. People don't always do that, even on your own home. Take a look at your roof and gutters, if not annually, at least once every 2 years, just to see, hey, maybe there's an opportunity where you can spend $500 to repair something and avoid having a ceiling fall in because of rain that went through your roof. Your driveways, your parking lots, anything external, and your vehicles. Like, you can set up preventative maintenance for all of these things. And these are, there's an investment to this, there is a cost to this, but it's more of an opportunity cost. Let's prevent disaster. Let's prevent a significant unexpected thing from happening, expense from happening. And be aware of potential future replacements, like your hot water tank. You're not going to check that, right? But if your hot water tank, if you've got a hot water tank and a boiler, if the hot water tank is like 8 to 10 years old, maybe just replace it, right? Don't wait for it to just blow and water to, just go all over the place. Look at some of those things, like make sure you've got that date. And if if your if your hot water tank is 7 years old, make the decision, talk to an HVAC guy, company, and, maybe schedule something next year and just get it done. Be proactive. Windows and doors too, have those checked out. Those, once they go, it's very costly to replace, and you don't want to do it last minute. Also check on your internal, external lighting. And, one note that I had here on this was that locally, your energy providers will likely have some sort of incentive for you if you improve the efficiency of your lighting, if you improve the efficiency of the energy that you're using in your space, especially if you're reducing the consumption during the peak hours. So if there's anything you can do to improve that, you're going to reduce your cost and you're going to make your space brighter and cleaner. Capital expenditures, again, focused on that furnace, maybe focused on that roof, on your vehicles. Build a budget based on that PM schedule. You can forecast that out and you can ask your vendor now, just a ballpark quote. I'm not going to hold you to it, but is it going to cost me 5,000 or 10,000? Just to give you a frame of reference. And then as you get closer, you can work with your vendor. Schedule the replacements because they're going to cause less interruption of your day-to-day operations. If it's less urgent, it's going to cost you less money. And we've had webinars where we talk about the tax benefits of capital expenditures. You don't have to wait until year end. If you're planning this out and you need to replace something, go ahead and do that in October. Do it ahead of the season you need it for. Take care of your AC at the end of the summer, for example. Do your furnace, in the spring, things like that. So you don't have to wait until the year end to realize those tax benefits. And I'm going to turn it over to John to finish out our presentation.
Great, thanks, Rob. I know we're getting tight on time, so I want to kind of take us to the end here on some of these other deductions. I mean, from a tax perspective, vehicle and travel is a large tax deduction. We deal with a lot of clients with this. So purchasing a vehicle, depreciation expense is basically, one of the larger deductions you'll have as a business sometimes. So if your vehicle is under 6,000 pounds, and that's the gross vehicle weight. So it's basically the amount of weight that the vehicle can handle, not necessarily the weight of the vehicle. There's annual depreciation limits for that. If you're looking to accelerate depreciation and write off most of your vehicle in the year that you purchase it, you want it to be over 6,000 pounds. And if you're not sure of the weight, either ask at the dealership or just open up your door handle actually, and right inside the driver's side door handle typically are all the weights. But this is a really good business deduction to have that non-business owners, it isn't available to non-business owners. So vehicle deductions are big. Leasing a vehicle. So the deduction here isn't as good as when you purchase a vehicle. However, you can write off the lease payments. So, if you're putting X amount down on a vehicle and then you're making a monthly payment, you can write off that lease payment versus writing off the entire vehicle. So there's a lot of strategy there when you're looking to lease or purchase a vehicle that you are using for the business. Mileage reimbursement. So for 2022, the rate is 58.5 cents per mile. So that actually went up with gas prices going up. So you have to decide when you're doing your taxes, which deduction is best for you. Should I take the mileage? Should I take the lease cost? Should I take the actual purchase of the vehicle depreciation? There's a lot to figure out and consider here when you're looking at vehicle and travel. Deductible travel costs. So that's transportation, bagging and shipping, car rental. If you're taking any sort of transportation like Uber or whatnot while you're traveling for work, that's all deductible expense that you want to capture through your books. Lodging and meals is 50%. So the meal deduction actually went away last year. Actually, the entertainment deduction went away, and the meals is at 50% of the cost. And then you have laundry, telephone, tips, anything that's ordinary and necessary travel expense you would include through your book. So the key is that you want to use your business bank accounts for these transactions, not your personal, and run all this stuff through your business. To cover yourself, you need documentation. You need to specify the business purpose, and it can't be lavish or extravagant. So this would eliminate a lot of things Tony likes to do probably. But anyways, this is a big one. When clients come to us about tax deductions, this area in retirement are kind of 1 and 2, 2 and 1, what we call the low-hanging fruit ideas to grab some tax deductions for people. So we just wanted to spend a little time on that.
All right. And for those of you, we do have a few more slides left. Hang on tight. Again, we do have that special promotion at the end of this, but let's continue on.
Yep. So one thing we wanted to cover that I mentioned in the beginning is your PPP2 forgiveness. The clock's ticking on this. So basically, your loan repayment begins 10 months after the end of your loan cover period. So your loan cover period in most cases was 24 weeks. So we kind of have an example up here that if you received your PPP, your second loan March 31st, and your 24-week cover period ended September 15th, you have until July 12th to have your loan forgiven. So you don't want to forget this, because if you forget to have your loan forgiven, then it's a loan and you have to pay it back. So there's a lot of strategy, and there is strategy with the ERC too, with this PPP forgiveness. So if you have a PPP loan and you're not sure if it's been forgiven or not yet with your bank, you really should check that out soon. We just wanted to point that out so there's no mistakes here and none of you are left with a sizable loan that you thought was forgiven that isn't.
And I would say is if you check with the, whoever you have with your PPP loan forgiveness, and you have any kind of confusion and you need support from the IC360 financial experts, please do not hesitate to reach out. They're definitely willing to work with you to figure out some way to make sure you get the benefit you're trying to achieve.
Yep, and then the last item we wanted to cover is just on bank financing. So right now, interest rates are still historically low. So if you own your facility and you have a good amount of equity in it, you may want to consider refinancing or doing a cash out refinance for any sort of improvements or any other cash needs you might have. But right now rates are low. Rates are looking to most likely be increased soon. So you want to lock in a low rate now. There's nothing we like better than what I call cheap money. And right now there's still cheap money. There's been cheap money for several years. But it's looking like maybe finally that cheap money might be going away. So if you want to get at your equity and borrow it pretty cheaply, this is probably one of your last times to be able to do it in the next several months. So you should talk to your bank, consider refinance, increase the line of credit capacity. There's a lot of options you could do here in order to get access to money for cash management purposes. Great.
And I want to, as we go down for our last two slides, just a reminder, John, Rob, our IC360 ECE financial experts, the different things that they are able to help you with well beyond just the key performance indicators, as well as grants and processing that, but really is the strategy around acquiring businesses, selling businesses, looking at should you, look at bringing on payroll solutions and things of that nature. Their group has been, in unison and teamwork with us in really attacking this marketplace and really doing what we can to really bring some great value to it. And so thank you, John and Rob, for that. And our last item that we wanted to offer is the special business benchmark offer. And that is specifically to this one here for discount school supply. They came up and said 25% off everything that they have in stock that's $99 or more until May 31st of 2022. What we're going to do is in the Q&A, we will send out some information on that so you can sign up. You do have to sign up for that. But that is something that I think you definitely want to take advantage of. We still have 18% off for things that are also not in stock with discount school supply. So it's definitely valuable for you to get involved with that from our membership standpoint for the 18%. But this is for everybody who's attending today. We'd like to offer you that 25% off all stock orders for $99 or above in your purchasing. With that said, we have run over our time a little bit, but I think we've had a ton of great information. I want to thank John, I want to thank Jen, and also Rob for their great work that they brought to us today. A lot of information. Do not hesitate. I know there's been a number of information elements that are coming through in the chat as well as the Q&A. We will be having our next webinar on January 16th. This one is going to be a little bit more unique in the sense it's outside of our business benchmarking series. This one is we're going to have Scott Wayman with Kangaroo Time, myself, as well as one or two of our members to really talk about what it is to be an entrepreneur in this industry, from what it is to acquire businesses, to grow your businesses, as well it is what it is to work with companies about getting capital, getting money, and trying to ensure that you are on a path for growth. So you'll start seeing registrations, opportunities for that coming out to you through social media and your email. So look out for that. From Tony DiAugustino with Inspire Care 360, I want to thank everybody very much for joining us for our business benchmarking series. Thanks again, John. We'll talk to you guys all very soon. Take care and have a wonderful day, everybody. Bye for now.